Hi, this is Optimus Futures, and we're back with our weekly roundup of key commodity and futures markets for our viewers. As always, please let us know in the comment section below how we're doing with these sessions, and of course, if you've got any questions relating to the analysis that we post here. So for this week, we started analysis from the 10-year Treasury No Futures market. This is again for the December delivery contract. So just studying the overall theme of the market, scrolling back a little, you can see that this market hasn't exactly been trending. But for the most part, we've had what you would refer to as a swing trading momentum where we have these mini trends going on here. And last week was pretty much, at least it started off on the same theme, although the latter half of the week, which is right over here, there was a lot more choppy up and down movement with more indecisive price action compared to some of the trading sessions earlier in the week and the weeks prior. So to decode the price action on this market the prior week, the first thing we would obviously want to do is plot this extremely responsive support and resistance area for this market. So essentially we kind of opened the week around here, which was at an interesting spot. We on Friday the week prior, we just bounced off of this area and we opened over here with hopes that price would probably hold here for a bit and maybe continue its way up. But the initial lack of trading volumes, or you can say the lack of interest in the early sessions here, kind of just allowed price to trickle down a little bit underneath the area over here. But really there wasn't really any kind of momentum with the bears at all. You can see a lot of candlesticks closing weekly here, no strong closes on the bearish candlesticks. And price basically was just able to trickle right back up above this level, momentarily just hold a support over here and continue its way back up. You can see that we did not hold at this short-term level over here. We had support and resistance, but price just kind of pushed through and basically made it closer towards the highs over here. We had a major high here, multiple highs over here, and of course a high over here. So in terms of support and resistance levels, if you can draw this area over here, you can see that this is precisely where price kind of held as resistance, from where we just had price kind of in no man's land for the rest of the week. Lots of up and down movement, pretty much like one bar up and one bar down. Sometimes within the bar we saw price come down and then trickle right all the way back up, which is pretty customary when you're in a market that is indecisive and just incredibly sideways. So going forward, we see that price is basically sort of closed at this level over here, where it pretty much found resistance earlier on in the week. Once again, depending on how we see momentum build up in the early part of next week, we may potentially see price doing something like this, where it breaks out of this level, comes back, holds as support, maybe continue on all the way to where's the highs over here and maybe levels beyond. Or otherwise we could just see continued up and down movement over here, sort of to carry on with the theme that we developed in the latter half of the prior week. We really do not have a bias in this market. Judging by how we're seeing price kind of just get caught up here a little bit, we expect price to continue to sort of consolidate in either a tight range like this or a more broader range where we see these mini trends kind of develop on the market, but we really do not have a long-term bias or a directional bias, I should say, for this market. Okay, so the next market we're going to be looking at is the Euro futures market, again for the December delivery contract. We've been talking a lot about this market in terms of the longer time frame chart pattern that we have here. Which is a very obvious bearish head and shoulders pattern, if you can see. So we basically had the left shoulder over here, the head, and then the right shoulder, and price basically broke very strongly to the downside, breaking the neckline, and we've been talking about how we sort of expected price to continue its way down and maybe hit the 1.14 level, which would have been pretty much in line with the theoretical play of a head and shoulders pattern, which is you would normally expect price to, once it breaks through the neckline of the head and shoulders pattern, which is right over here, it should roughly travel the distance between the neckline and the head, and that sort of just lined up with the 1.14 level pretty nicely. Unfortunately, The price action that we saw unfold following the move down under the neckline of the head and shoulder pattern here has been kind of disappointing from the perspective of the head and shoulder play. So essentially this week we kind of just pushed right straight through the neckline over here and closed strongly. Now that in itself is a very strong indication that we may actually be heading into a market that's going to be more sideways rather than a typical market that's just topped out at a head and shoulder pattern, and you know we're going to see a strong move down to the 1.14 levels or levels underneath even, you know, such as this level over here. So we really weren't able to see that, at least so far. So if we just go back to the 2-hour time frame to break down the price action that we had in the market the prior week. So we sort of opened around here the last week, and price straight away pushed straight through the neckline, which was roughly around this area over here. So we just throw that in for reference. It's going to be easier. It's somewhere around this mark over here. So essentially we just pushed through straight away, absolutely no resistance at all at the neckline, and price just pushed through. It didn't even bother to pull back and maybe, you know, use this level as support, which you would typically expect as price makes through these important levels. It just pretty much just rushed through and essentially just held up around this area over here, which is once again not a surprise at all, extremely important resistance area. And once again price just pulls back to it and holds its resistance again. We see a bearish engulfing candlestick pattern over here, and price just continues its way down. Eventually we've ended up closing near to the neckline of the head and shoulders pattern here, as well as the support and resistance level, which once again leaves us on the sidelines for this market, because given the fact that we've almost nullified the head and shoulder pattern play out, not laying our bets in this market anymore, we do believe that we could be actually running a lot more sideways in the coming weeks and months. So essentially we're just sitting at this extremely important level here. Depending on how we see the market unfold in the initial few sessions the next week, we may just continue our way back up and just continue to consolidate, or we could possibly even see price push right back down and basically just oscillate around the neckline or the horizontal support and resistance level that we're looking at over here. Either ways, it does seem that the market that has been in a very dominant uptrend for a very long period of time is definitely looking to either top out in the long term or maybe consolidate for a decent period of time over here. So really, once again, a market where we do not have a bias anymore in terms of where we expect price to be going in the long term. A lot will really depend on how price kind of unfolds as the next few weeks roll out. Okay, so the next market we're going to be looking at is the light crude oil futures market, again for the December delivery contract. So for this market, we've really been talking about how price has been able to push through longer term support and resistance levels quite swiftly and without requiring to pull back to them and use them as support or to gather more order flow at all. The momentum towards the upside has really been very strong on this market in the past few weeks. So for this week, we sort of opened around here at this mark, which is pretty near some extremely long-term support and resistance levels. And before we hit the higher time frames to see the bigger picture, let's just decode the price action here. So essentially, we just opened around this mark over here, and price basically just dropped like a stone straight into this former resistance level around here, which turned into support really nicely. We did have multiple touches at the level, which roughly lines up with the 5,500 round number, and basically price pulled back to erase much of the action that the bears were able to print in the earlier part of the week to sort of close even Stevens for the week. So if we look at the daily time frame here, so if we just move to the daily time frame here, we can clearly see that price is basically sitting at a very important past level here. We've had major evidence of a lot of resistance coming in at this level, and that precisely explains why we saw that bearish action coming into the market the first part of prior week. And once again, the short-term level that we've been looking at on the lower time frame as form of resistance turning into support actually kind of lines up with a very important resistance level in the past as well. So this really is a more longer-term area, and really no surprise why more buy orders came into the markets. Essentially what we have here is price pushing past all of these important swing highs in the market. So essentially we've just pushed through all of these levels over here, and we're now sitting pretty close to this very important long-term swing high. And the strong close on Friday just possibly just sets the tone for next week as well. So essentially if we do see some strong momentum build up the early part of next week, we could easily see price make it past prior week's high, which is around this mark over here, and possibly even test this all-important high over here. And potentially in the coming weeks we could see price maybe just kind of propel past all of these levels and create a more dominant uptrend that could be here to stay for a while. But it's too soon to lay any bets in that kind of development. A lot will obviously depend on how price unfolds the next week and the weeks that are going to follow the coming weeks. So, but just by the looks of the market so far and the bullish momentum that we've seen develop, it does seem to be a promising story for more upward price movement. We could possibly see the 60 round number get hit, which is going to be pretty important for this market. Okay, so the next market we're going to be talking about is the S&P 500 E-mini futures market, again for the December delivery contract. So we've been talking a lot about this market as one that has transformed quite rapidly from a very strongly uptrending market to a more range-bound and choppy one. And last week, that theme kind of just built up even more. So essentially, if we break down the price action over here, the week kind of opened around this area, right in the middle of an extremely choppy trading range, and that momentum kind of continued on pretty much the entire first part of the week, where we saw price kind of just drop into this level around here, bounce off. Let's just get rid of these arrows over here. So basically, price just dropped straight down into these levels around here, and once again we see several instances around these price levels where price was able to bounce extremely sharply, and we did see a bounce come right off of here as well. But once again, the bulls were really not able to take price their way as bears took over once again, and price just trickled once down underneath these levels. Once again, buying coming into the market around these levels, not something that you wouldn't expect, just simply given the importance of this level. You can see history tells us the price has been rebounding off of these areas extremely hard, and that's kind of what we saw sort of develop midway during the week. It wasn't exactly clear price action, which is not surprising in a way, given the fact that we've been extremely choppy. So we basically just had a down bar that closed well, and then an up bar that again closed well, then a couple of bars where price once again trickled down and just lost momentum, and bulls just took over from there on. So essentially what we were able to do in the latter half of the week is kind of just close above this level, only momentarily turned out to be a fake break as price just pulled right back underneath the level, pulled back as resistance over here, held at the level, and once again we see that bears towards the end of the week erased much of the bullish price action that was printed in the middle of the week. So essentially, once again, we're closed around here at this level, which isn't a very interesting location because it's once again kind of just stuck in this range over here. The best part about prior week's activity, however, has been the fact that we're now kind of trading in a more broader range compared to where we started the week off of. So we kind of just started the week around here, which was a more narrow range around here, and then essentially broke out of it, and just the fact that we're now kind of in a more slingy price action, we could expect price to make some strong moves up and down the following week, we do have a larger trading range here formed by the low that we hit the prior week and the high that we have from the week even prior to the one that closed. Once again, no directional bias on this market at all. It's just been very, very sideways, although we do feel that price may eventually trickle up to the 2600 area, and possibly the order flow that's sitting around at that important level may dictate a more longer term trend for this market. But for now, it's just stuck in a phase where everything's just entirely indecisive. So finally, we're going to be looking at the gold futures market now. This was one of the markets that sort of started slow, but really evolved into one of the most interesting markets for the week. So just talking about this market in general, once again, this has been a more sideways market of late. We've seen a lot of candlesticks just print spikes all around, up and down the chart, and you can really just associate all of this with a lot of indecisiveness, and that's kind of been the theme for this market for quite a few weeks in the past. But the prior week we did see some strong action towards the later half of the week. So we basically have price just bounce off of this support trend line. We had two touches here. Price came back for a third touch and basically just bounced off of here very, very hard. As expected, we find some resistance at this forward resistance area, a very sharp bounce. Price pulls back, once again tries and tests this area. This time just ends up breaking the area, closing strongly, and that's kind of where the week ended. So essentially for this market, the interesting thing is that if you take a broader look, we really have just been able to push past all of this mess underneath over here, and if really early next week we see price pull back to this area, hold this support at these former highs over here, and we see a sharp move back up, this market could well be in contention to maybe hit the highs around here, because the pathway to these highs will then be a lot clearer. So essentially we've been in a lot of mess over here, but now the market's through all of this mess, and if it holds a support and we do not see price just trickle right back down due to a lack of interest from the buyers, then really we could see price kind of just make its way back up and more smoothly this time around, perhaps to these highs around here. So this is one market we're surely going to be looking at very carefully the next week. Although we do not yet have a bias for this market, a lot will really depend on what happens if and when price kind of pulls back to this area, to the top of this box over here. But we would surely like to see some bullish price action confirming that we've broken out of this box over here. So that essentially just wraps up our weekly roundup of the 5 key markets that we've been looking at week in, week out. Do please let us know how you're finding these sessions and any tips and improvement.